Chair recognizes Mr. McHenry.
Thank you. Just to be clear, there's $68 billion worth of loss, $30.4 billion associated with this AIG deal we're talking about now. So there's significant loss to the taxpayers already through TARP. And so this new tax is simply about making up for that revenue. Mr. Secretary, do you support H.R. 4173, the Wall Street Reform and Consumer Protection Act?
Congressman, I'm not sure of the precise legislative amendment you're citing.
No, it's not an amendment. It's a bill sponsored by Barney Frank of Massachusetts, the chairman. Is this
the comprehensive financial reform law that passed the House in December?
Yes.
Yes, I support that.
You support that. Okay. And do you support the Volcker rule?
Absolutely. What the President proposed is that working with the bill that passed the House, which included a provision that I think Mr. Kanjorski authored to give the government the ability to limit risk-taking by banks, that we make sure those translate into limits that will actually prevent risk-taking in the future.
So it's consistent with H.R. 4173?
Absolutely. That bill, and this is very important for people to understand, that bill included
I understand. I'm on the committee.
Yeah, included a provision that would give the government the ability to limit risk-taking in a way that helped prevent future crises.
Wasn't it your legislative staff that really worked to change the Kanjorski Amendment?
Well, again, we work closely with members of that committee on a whole range of those provisions to make sure that they met the intent.
No, you're not answering my question.
Oh, on that amendment, absolutely we work with them on that amendment.
You worked with them on that amendment
but on all provisions
to limit it in terms of its reach.
No, we worked on it to limit to make sure that it was going to work.
Okay. So, in essence, the Volcker rule is something you support?
Yes.
Okay. You testified last month before the Joint Economic Committee, quote, I would not support reinstating Glass-Steagall, and I don't actually believe that the end of Glass-Steagall played a significant role in the cause of this crisis. Do you still stand by that statement?
Absolutely.
How do you reconcile that belief with this rule that, in essence, limits or forces banks to divest in hedge funds and private equity and all these other additional elements that is, in essence, Glass-Steagall?
No, well, what Glass-Steagall did was to allow banks to underwrite equities and to engage in a whole range of other types of financial activities, insurance as well.
It limited that ability, to be clear.
And we support, as I think the bill that you cited did support, it did actually provide authority to limit a set of activities so that the access to the safety net is not subsidizing excessive risk-taking. It's a simple principle.
I know it's
does it dial back some of the Gramm-Leach-Bliley reforms? It does do that.
Okay,
but it is not what people typically refer to as Glass-Steagall.
Okay. So it also says that if you engage in a certain type of, if you have a certain form, meaning a bank holding company, you have to adhere to certain rules, correct?
That's right. Yeah.
Okay. You also testified before the Financial Services Committee, of which I sit, last year that, quote, financial products and institutions should be regulated by the economic function they provide and the risks they present, not the legal form they take.
That's right. I agree with that.
And so you support a rule that says, based on a legal form you take, you have to adhere to these principles. How do you reconcile this?
They're perfectly consistent, but let me state the basic principle again.
They're perfectly opposite.
No, what we're saying is, and this is very important for people to understand, if you are operating in the financial markets, you're helping companies raise credit, raise capital. You're helping make markets work. You're providing liquidity to markets. It doesn't matter, it shouldn't matter to us or the American people, whether you're called Goldman Sachs or whether you're called JP Morgan. You should be subjected to a set of constraints on capital, on leverage, on how you're funded that limit the amount of risks you take. If, in addition to that, you want to own a bank and operate a bank, then there are a set of other limits that we think are good in the public interest so that, again, you can't take advantage of that access to the safety net to subsidize a set of activities that are not essential to.
But basically you're saying, if you just simply drop the bank holding company label, you're out from under those
Absolutely
regulations.
not. And that would be a mistake for the country. Our view is...
That's actually what the one-page rule that...
No, it does not do that. It's not a fair reading of the rule. But, Congressman, maybe this would be helpful for me to say to you. We will work very closely with members on both sides of the aisle to make sure that this legislation results in a set of sensible constraints and risk-taking.
That would be something new.
Gentleman's time has expired.
Over the last 13 months, because you have not reached out to Republicans, to be clear, on the financial services.
That is not true, but again, I'm happy going forward to make sure that as we try to give these force of law, reflect them in regulation, we do so carefully with full consultation.